Hi, I'm Andrew Grinstead. I'm the CEO of Leavell Investments, and we thought that we would do this video to share a little bit about our investment commentary and our philosophy behind writing it. And we really like to focus ours on investment principles that applies to the current situation, the current circumstances, make them more timeless, and help those guide you through the uncertainty of the future. As most people know, the last quarter, U.S. stocks were down, and it was the first time in a while they'd been down. But we really encourage our clients to look at the long-term picture. And if you look at the last 5 years, U.S. stocks actually have been up 19% on an annualized basis, which is really a remarkable run. So how did we get to where we are today? Basically, there's two fundamental drivers of stock prices. One driver is economic fundamentals, how a company's doing, its profits, its cash flows, its earnings. And then the other one is sentiment, which is really a behavioral characteristic. How willing are people to take risk at a current point in time? So you think about 5 years ago where we were, economic fundamentals from government stimulus, but also because of just advancements that we didn't expect, particularly things like AI or how fast we had the COVID vaccines or even weight loss drugs. There's been a lot of advancements that increase the profitability of companies broadly. So heading into the end of this year, really, you had surprised upside in both how companies were doing from a fundamental basis and also how investors were feeling. So in April, we had the announcement of the tariffs, and that was really an inflection point. When you have a country that consumes more than you produce, which the United States has for most of my career, the way you fund that is by issuing IOUs. Now, most people think about IOUs in the form of U.S. Treasuries, but really it's all securities. If I purchase something from you, I issue an IOU, that can both be a treasury, but could also be a bond, it could also be a stock, it could also be U.S. real estate. And if you look at U.S. securities in total, foreign investors own about 20% of all U.S. issued securities. And to the extent that the United States will be consuming less because of tariffs, that means that we will be issuing less securities going forward to foreigners. And so that's a real change in the dynamic about how people might view investing in the United States. And so I think it's fair to say that moving forward, we're going to be watching, both sentiment and fundamentals for further shifts. But right now, there's obviously a headwind, and until those dissipate, we don't expect the stock market to really perform like it did for the last 5 years. So I think the thing we want you to take away from our commentaries are you investing with the right principles? Do you feel comfortable with where your portfolio is today? We stand ready to meet with all of our clients at any time to make sure that they can sleep at the night through the news cycle, through the changes that will come undoubtedly with investor sentiment or economic fundamentals. And we'd love to have you contact us if you want to sit down and make a plan about how to move forward and feel confident about your investments.